2021 was the year of NFTs. It was the start of a phenomenon that permeated popular culture. And unless you were living under a rock, you couldn't avoid them.
A digital artwork by a relatively unknown American artist known as Beeple has sold at Christie's for nearly $70 million.
You're a digital artist who sells NFTs. I just got my first NFT. Are you there? I bought an 8.
This new highlight is going to replicate, is going to emulate the trading card.
It's become something that was a bit of a novelty to something that's become a lot more mainstream very, very rapidly.
But ever since January this year, NFTs have been on a consistent decline. From the biggest brands to emerge to the biggest brands in history, they've all seen their digital assets decline significantly in value. If you bought into the hype, if you bought at the top, your investments are down 60% or more in some cases. That's really tough, especially in these trying times. A lot of people are wondering when their NFTs will regain value. When will the Omi token get back to their dollar cost average or all-time highs? Here is my take on when and how the upcoming developments will affect the prices. Let's get into it. Let's first look at the developments within the Veve app and how I think these will move the prices, both up and down. Now, things can launch which are great for the overall health of the ecosystem, but maybe not so good for the short-term prices. We know that the web app will be one of those features that should be first to arrive from that pipeline of developments. On its own, I don't think it will have any effect on the prices. I do think it will help with the overall user experience and might improve the time on app metrics, but its real contribution is being key to launching other aspects that I personally think will move the prices to a certain extent. One of those things that will not increase the price is KYC. Now, don't get me wrong, it's great for the overall health of the market to give true prices and eventually more natural and predictable growth. But I've been preaching this since October of last year. The bot exodus leads to market crashes. We saw this with NBA Top Shot, and we saw the exact same thing when Ecomi finally clamped down on theirs. I think KYC will be that final nail in the coffin, and the remaining bots will disappear. Great, right? Well, for the short-term prices, that's not so good. That artificial demand that they provided will be stomped out, and their inventory will be dumped to cash out. That's what happens. That's what the other platforms and history show will happen. Now let's talk about MTL, the much anticipated MTL. I think it will have two effects. First, the immediate effect. I believe the market will take an immediate dip, and I think the Ecomi team knows this, hence the very, very slow rollout. They're trying to avoid a bank run and panic associated with a severe market crash. Now, I know the market has crashed a ton since January, but it's been a slow bleed. 5% here, 10% there. You'd see that if you watch my weekly market update videos, which I upload as YouTube Shorts. Now, I'm still updating my data weekly, but I'm probably going to switch to monthly reports. Maybe still in YouTube short format. I'm kind of undecided about that right now. Anyways, about MTL, it was said several months ago, 98% of people on the app have less than 100 gems. Even if that number doubled, tripled, or even quadrupled, a ton of people still need to sell their comics and collectibles to get the gems to cash out. In the long term, this is a good thing. The FUD surrounding the lack of MTL, I believe, has halted the NFT purists from using the Veve app. Adding in the high Apple and Play Store fees all combine to deter people from buying gems, so MTL plus the web app will solve that problem. So immediate dip, but long term the MTL is a great thing regarding our collectible prices. Okay, let's talk about Omi to NFT, and this is an interesting one. When this is enabled, I think it'll be a battle between those who want Veve NFT grails, which is buy pressure for the NFTs, versus those who want Omi, which is sell pressure for the NFTs. You see, I'm sure I'm not the only one. When first buying collectibles back in March of last year, my plan was always to sell collectibles for Omi. That plan has personally changed since then, but I know I'm not the only one that had that mentality. Back then, we were landing season 1 drops, and we were landing them very easily. And I know the collectibles are down from the all-time highs, but all those season 1s we landed on the drop, they're up, and we're in profit. All the Omi we bought at the same time are down. So I'd say Omi is a bit more desirable because they're at a better bargain. I'd rather sell my Dragon Girl, which I'm up $1,000 on, over my Omi, which I'm down from my DCA of about half a cent. Also, let's consider the narrative last year was that Omi to NFT will allow the crypto-rich whales to now buy our NFTs by converting their ETH, Bitcoin, or whatever to Omi and then buying our collectibles. Now that sounds great in theory, and I'm sure there will be some hopium that those whales will sweep the floors, but I don't think that will happen right now. I don't think that'll be the case. People will not sell their ETH that's under $2,000, or their Bitcoin that's under $30,000. Maybe for the sake of diversifying, maybe some of them will, but only for grails like Marvel Comics #1. That's why I say the grails have the best chance to not dip as much. If you want historical proof of this, let's look at buying patterns that we've already seen before, and it's called altcoin season. When crypto assets are up, these holders then take profits and then funnel them into the mid caps and then eventually the low caps to catch the next wave. This is a fact, this is history, and these are the buying patterns. They take their profits, not their losses. And make no mistake, many people are at a loss position because a large proportion of people who are in crypto today joined during last year's bull run. So Omida NFT is great down the road after a market recovery, but I don't think it'll be a massive effect right now in the immediate to short term. This will change in the long term. I truly believe that. But the issue I'm seeing here is there are some serious macroeconomic issues that will take some time to resolve. In a bear market, many of the positive factors are suppressed, unlike if they were to have launched last year. So we kind of need the market to turn around. And when will that happen? To kind of answer that, I first need to explain why the market is contracting.
COVID-19.
Coronavirus.
This pandemic has sucked.
We just got out of a 1 in 100 year event with a global pandemic. Then 2022 decided to throw us a curveball.
Russian President Vladimir Putin authorized a special military operation.
But Europe will absorb the fallout from gas shortages. Prices have already shot up.
Let's focus back in on Amazon now and the miss for the company.
Facebook is getting shellacked. You want to go base jumping here? I hope you have a parachute.
How could you be so wrong in April?
And at this point, I think it's safe to say it's over for Terraform Labs.
We just got hit hard with back-to-back massive blows, and I'm not so sure it's over just yet. What we're seeing is while the micro developments are great for building out the ecosystem, the overall effects are dictated by the macroeconomic trends. It's like the micro is building the infrastructure to a rocket, but the macro is what fuels the rocket. If you want more proof of this, just look at other markets. Dapper Labs announced a partnership with Instagram to be their network for their NFTs. That's huge, but there was no change in Flow's valuation. The ETH merge, which is to move Ethereum to proof of stake from proof of work, is one of the most anticipated events in crypto. It has been for years, and it's on the verge of happening. But again, no change in ETH's valuation from this. If either of these events occurred last year, let's say last year in April during a bull market, I am certain these would have had massive positive effects on their token valuations. Unfortunately, this isn't a bull market, and we could be seeing more bad times on that macro side. As companies continue to miss earnings, from my experience, these usually precede layoffs. And I'm starting to hear some companies, just through friends of mine, going lean because of poor earnings expectations. There's more proof out there.
Also just see it by going outside. I'm here on Queen Street West here in downtown Toronto, and if there's any place that you could see where the pandemic hit the hardest, it's here. This place is normally filled with a lot of small independent stores, and during the height of the pandemic, a lot of them had to close down. A lot of them are still closed today, and I'm sure many big cities are seeing the same thing. Luckily, the Silver Snail, my go-to comic book store, is still open. So as you can see, the macro trends are sort of dictating how people spend their money. And it also sets the ceiling to how high these micro developments, the developments within the Veve platform, how high they can go. As the economy puts people's financial stability at risk, they're naturally less likely to take on more risk. And this might seem weird to you and I because we're all involved in crypto, but NFTs and crypto are some of the most riskiest assets out there. Some might say the riskiest asset out there. And even if you don't look at them like investments, let's say you look at them like collectibles, then that's still a problem because they're luxury items. You see, what this pandemic did was it caused supply chain shortages. And those supply chain shortages increased the price of normal goods and services. Wages have not yet caught up with these increases in prices. So when people tighten down their budget, luxury items like collectibles, like our NFTs, are the first things to get cut out. Now, I have no doubt that the markets will bounce back. We just need to look for signs when that will occur. So what are these signs? I'm not a financial advisor, but here's what I'm looking for. I want to see these companies meet their expected earnings. If they can't even meet their earning expectations, which should have been adjusted for a pandemic, that's kind of bad.
As they miss earnings, it increases the possibility for layoffs. I've had the privilege and the curse to be a part of those meetings. You cut your non-essential travel, your non-essential outings, then cuts to marketing because effects of marketing are significantly lessened in a recession. Then you cut your contract workers, and then your part-time and full-time headcount. That's what happens. So meeting or exceeding earnings is a signal I'm looking for with these big companies. On the numbers front, bond yields are something to pay attention to. An inverted curve means we're likely to get further slowdowns in the market, and a steeper curve has been a very good correlator for growth. We also need to see improving unemployment numbers. Now, within the macro crypto markets, I want to see how other projects are doing. NBA Top Shot has been a great precursor to how Veve will perform. I was a part of it, seeing the meteoric rise, the effect of bots, and then their eventual clampdown on bots plus MTL. Then seeing what all those did to the markets. And spoiler alert, they crashed the market. That's a reason why I never gave out those outlandish price predictions for collectibles, or FOMO'd into things when they were peaking, because I saw what happened there and I was very cognizant of that. If you don't believe me, I put out a Top Shot video about 8 months ago, and I refer to that often because it's such a great precursor to Veve's market. That's another topic. Today it's about our NFTs and crypto recovery, but I am eyeing these other crypto projects that can maybe once again serve as precursors. If they can start to recover, it doesn't have to be Veve recovering first, but that can be an indication that people are once again coming back into the space, willing to take on more risky assets. Once they get back into the space, the speculation will then happen. They'll wonder, what is the best project? And you have to look at a platform with a strong ecosystem with the biggest brands in the world. But just be cautious, please. The world is kind of crazy right now, and there are a potential black swan events.
Concerns are growing now over the potential spread of monkeypox here in the U.S.
China could be preparing for war. The target is Taiwan. The People's Liberation Army is making dangerous moves.
The U.S. military would respond if China invaded Taiwan.
If monkeypox becomes a bigger issue, or if China decides to invade Taiwan, without a doubt, there will be loss of lives and all markets will take another big dump. I just hope monkeypox doesn't make a baby with COVID and then turn into mutant monkey COVID-22. That would be pretty devastating. So when will we moon? When will we get back there? I feel like there's a lot of, unfortunately, meme coin expectations of making money in days, weeks, and months. But when you look at the micro developments I discussed, they realistically take several months to years to happen, if you want them done properly. The macroeconomic factors discussed also takes several months to maybe years to resolve themselves. And hopefully there are no black swan events to push those back even further. So once the macroeconomic issues resolve themselves, then people will begin to feel more comfortable taking on more risky investments like NFTs and crypto. It doesn't happen the other way around. ETH whales sell their ETH at a high into more speculative investments. Again, not the other way around. So we need to look for those signs of a turnaround occurring. Some experts say the economy needs to recess a little bit more before it gets better. So a timeline of late this year is probably the best case scenario, probably next. But again, let's look for those signs that I mentioned here today to see if that projection is sooner or later. I will be paying attention to the markets, so you can also follow here for all that information and my interpretations of that. I mean, I'd love to share more comic knowledge with you all, but as an investor, it really doesn't matter. Without incorporating the understanding of the developments within Ecomi, adding in the evolution in this space, plus an understanding of the macroeconomic situation, it doesn't matter what TV shows are coming up. So there will be plenty of time to accumulate. But it's also important to have realistic expectations, and that's what I'm trying to provide to you all here today. We will get back there. I have no doubt about it. It will just be longer than some are hoping for. But I believe the strongest projects will get back there. And make no mistake, Veve is one of the strongest ones out there, with their ecosystem and real revenue they're making and sitting on. They will survive and thrive in the long term, unlike those just sitting on promises. Thanks so much for watching. Please consider liking, subscribing, and following. And I'll see you in the next videos.